Hi, Warriors. How's everyone doing today? Mike, Kman, Ryan's here today. Everyone see these traffic lights? Not healthy to run red lights. What a difference a week makes. Threatening an upside breakout. Getting there, 90.34 or so. Maybe the Fed takes it there. So, Ryan, welcome back. Are you are you okay?
Yeah, I'm good, mate. I'm good, thank you.
All right. So, Euro. Why don't we start there, even though the end's a big story? Why don't we start with the Euro? Just trying to hold on to these moving averages. Vulnerable, isn't it?
Yes, yes, it is a bit vulnerable. It was looking more vulnerable than it has been the last couple of weeks, anyway.
Yeah,
That's the FOMC pull on it. I think.
yeah.
Um, I don't think. I don't think the Fed's going to be a decider for this one. It may dip further, but I don't think it's going to be a game changer. I would not be surprised if it starts moving back up after the FOMC if there's nothing game changing from those guys.
Okay. All right. BOE was last night, huh? Or today?
BOE.
BOE? Yeah, BOE.
You got the B and the O right. Just
Yeah.
no, that's
I'm lucky I
Thursday.
got those right.
Yeah, well, it was 66% win rate, so that's all right.
Yeah, yeah.
Yeah, BOE's Thursday, and more importantly, the inflation numbers are out tomorrow morning. That's going to be the deciding factor, I think, for the pound, at least ahead of the BOE.
Okay. View. I'd sell a rip.
Yeah, I think the risk is two way on this one. With that inflation data, if it comes in hot, then that's going to keep a rate cut expectation to push further back, and you'll probably see cable rally. Remember that this meeting comes after the Fed, so we could be at 129 or 125 after the Fed.
Okay.
Then you need to worry about cable. I'm more interested in euro sterling actually, and
Okay.
that big 85 level that we keep holding, but we're not bouncing far from. That's the real risk pair at
Yeah.
the moment.
Maybe the double bottom's too obvious and
Yeah,
they have to flush it. Yeah. I know that Kman wanted, probably still wants to sell a rally in Aussie. I just want to show everyone who's here how simple it is to determine relative strength. Okay, so let's just use moving averages. Here's Euro holding the 50 and the 200. Here's cable, 200 still underneath it. And then again, here you go. Here's your preferred short beneath both of them right here. So Blake brought it up that, with copper strength and China railing, Aussie can't get out of its way. Um, any, did we have the RBA? Or is that,
Yes, we
was
did.
it?
Good morning, Dale. Good
Good
morning.
morning. Go, take it away.
It was unhawkish, so Aussie let go. Yeah, I did sell into the RBA meeting,
Okay.
so that's not too bad. Yeah, I mean, Bullock was trying to keep up appearances, but the market didn't buy it. The dollar being a bit strong as well. That's the result is here, and we are trading just below that 65, 25, 40 zone as well. There's a lot going on there in that little area where your moving averages are, because there lies the bottom of the daily cloud as well in the Aussie dollar. That's going to be
So we've broken underneath the bottom of the cloud.
Yeah, we are trading below. We went briefly inside on that move up above 66.5, and but since two sessions we are trading back below, and it's weighing pretty heavy on it seems.
Okay. Just something I was thinking of because I saw the early morning high in the Dixie. Oh, we didn't get there. The high was 405. So, this 420 high is going to be important. So is this a rally to sell here in front of the Fed?
No, no, well, not for me.
Okay.
No, I won't sell the Fed. I mean, I won't sell the Fed pre-Fed, but then let's see what those dots are telling us, because the rest, I guess it's going to be a bit of a non-moving meeting unless surprises, but the dots are going to tell us what we need to know for the dollar, I guess.
Okay. Risk seems a little bit concerned about it. Didn't put in a good day yesterday, and then yesterday in Apple, we couldn't even get to 180, 178. That's pretty lousy close in Apple. So, like I've been saying for a few days, Nasdaq never made a new high with the S&Ps. Russell looks, you know, the worst. This could just be a two drive, though. We could pull back and then launch again. I don't know how deep the pullback will be, but the divergence was very glaring in that. And see if the VIX can get over 16 if there's a correction. That would be kind of a big warning sign there. And gold, silver, it's my contention that silver completed something up here, and that there'll be a nice break to buy. And it's a secret where I'm going to do it.
Yeah.
Ooh, don't keep secrets like that.
Oh, it's a very big secret.
I've got it.
I only shared it with the CIA. Huh?
I've got the trend line up there actually. Stell's got it a bit lower around 25, but I've got the trend line rather up there where we printed up. So
yeah, that's a weekly breakout up there. That was, I remember seeing Stell's chart. That was a weekly.
That was and it was a false breakout. It was the same time that gold tried to break out.
Yeah.
The fact that we can't overcome that high would scare the crap out of me. If we start just carving out lower highs in silver, I would just be worried about owning silver, to be honest.
Okay. Well, I'm looking for a correction in the physical to buy some of these silver stocks. There's the ETF on the juniors. I'd like a fib retracement, maybe 860. GDX being the majors, 28, maybe it goes for the gap. But I think, that this was just the first wave. And that, down here it was a theory to buy these, when I was just, putting on a little stuff in AG. But now it's, you have a low to play against. So, on a pullback, it's a higher probability buy. Look at what this one did. This was, 140 to 220. That's what, 50%. That's pretty good. So, down here it was a theory. Yeah, there's divergence. It's due. It's, sold out. But now, if you get a pullback, it's not a theory anymore. You had the first move out of here, and now you look for the pullback, and then you're wrong under the low. So it's actually a better buy, even if you didn't catch the bottom. A higher probability buy after market has already bottomed to buy the first pullback. Ellioticians would say a 2 or a B. So that's it. That's about all I have. I think that the market's a little worried about what Paul's going to say tomorrow.
Well, we got a lot to talk about, and let's just dive into continuing this conversation about the yen, because I even got texts from people that are not currency traders that are like, why is the yen going down? This is yesterday. And this is yesterday, in the afternoon, well before the BOJ. And I think it's worth noting that we had conversations all day yesterday about how so many banks and institutions have a lot of these big banks, Goldman, Citibank were the last two that we noted yesterday, that changed their tune to, oh yeah, let's expect removal of negative interest rates, and that was a sign, as it was, that you got to be really careful, with yen longs. And then we saw, obviously the yen break down. But let's take a step back and let's start with Ryan, because now we got a full boat. People are completely logged in now, listening in, versus when we first started. Ryan, break down the BOJ for us and what exactly we got.
Well, we got everything. We got
everything the market wanted, right?
Yeah, we got the rate
Almost.
hike. We got the end of YCC, the end of ETF buying, the continuation of let's call it reinvestment. They're going to keep buying what's expiring on the JGB front, but they're going to keep buying anyway. He was a little. The statement had no real forward guidance in it at all. Hence why we only dipped, well, surprisingly only dipped 20 odd pips on the announcement. I was expecting more just for a confirmation move at least. But that was very weak, and that was your first tell. And then nothing in the statement regarding future hikes or the path and anything. And so we started rallying. Then over the presser, he started off again on the more dovish easing side, reiterating that they're still ready to ease if they need to. And then he sort of switched into possibilities of when they might hike again. But we've been flagging this for months and months. It was going to be a non-hawkish announcement. When it did come, it's going to be a slow and steady announcement. The market was all over it prior to the announcement the last week or so. And as we've been saying, it turned into the buy rumor, sell fact trade. And everyone in the room hopefully piled onto it. I know a few of us did. And we all jumped in. And now we wait and see what happens next.
Yeah, I was, last night I did a, cheeky sell up against 149.90, I think was my entry. And I just put my stops above 150 because I went to bed. I couldn't stay up for the press conference, but I had a feeling that was going to happen because we talked about it all day yesterday on the morning edge, the daily roundup. I, sat there and said, hey guys, if you're long yen, you got to be really, really careful going into this. And, now I have, here's my fear, and Kman, I'm going to ask you your thoughts here in just a second, but, here's my fear with the dollar yen and the yen in general. And I'm going to take a step out for a second, or step back for a second. And I want to pull up this chart for you. Let me get over to the dollar yen really quick and just take you over to this daily chart. So the problem that I see in the yen is the pullback that we've seen over the course of the last couple of weeks has only been to a 38% retracement. You can see that stopped basically at 147. Roughly we drop below that 146.50 or whatever. But what that really means is that if we're only pulling back at 38% retracement, and we got this news that everybody was expecting, we got what we wanted, minus JGB purchases still incoming. I think the risk is, especially if we're coming in the FOMC, and then you start looking at, is the Fed going to be dovish, based on the data that we have right now? I still don't see it. If the dollar rips, the dollar yen could be trading up at 152, 154. And that's the long-term, bull flag pattern expectations that we've had, for a while. And you start breaking above 152, that's where stops start getting triggered. And I didn't think that was possible going into this BOJ, but now that we're past it and we've seen the price action, it seems very possible to me. Because the pullback has been shallow enough to where this bull flag pattern is still possible. And boy, don't these stops above 152 just look juicy. So, Kman, let's talk a little bit about expectations here, about the BOJ and what we can expect the BOJ to do from here on out, because this was a historic move in monetary policy. So what are your thoughts?
I think it's still going to be a very slow process. And we were fortunate enough because the press conference translated into English was a bit confusing, in my opinion. But then fortunate enough to be able to read some Japanese comments afterwards. And they still agree with what I'm saying. It's going to be an extremely slow process. There may even not be another rate hike this year. There may not be. But that's going to be down, in my opinion, to the real wages. Okay, so for the time being, they kept their JGB buying at the kind of low end of what they need to do to cover all the maturities next year, but they leave the door open to do more. And actually, the day before, yesterday, early morning, so in the Japanese session before the Bank of Japan, they actually did buy non-scheduled JGB. So that tells us that they are not really going to let the market go. And then you see the reaction in the JGBs after the Bank of Japan. Japan is not impressed at all with the whole thing. So we are in that scenario that we've talked about in length, saying that it's going to be a very, very slow process. And the market has traded it before the actual announcement. And once it got the announcement, seeing that the very small reaction that we had, I must admit, I was a bit surprised that on the actual announcement, we only had 20 pips reaction. That is nothing, right? That is,
yeah,
that's an algo blip. That's just the price. Really very, very surprised. And then I think the market was just already positioned long yen and goes like, well, okay, yeah, I mean, that was it. And we need to cover. We actually saw quite a bit of Swiss activity this morning. If you look at crosses in Swiss have been sold, and I suspect that a lot of it is Swiss yen being bought back.
and if you look at the Swiss ahead of the Swiss National Bank, we just hit the 618. We're within 5 pips of the 618 retracement. So very, very big resistance coming in ahead of the Swiss National Bank too. On top of that, this week.
Yeah, if S&P goes, the market is not expecting, and I said yesterday, it's only a 25-30% chance that the S&P does something. But if they do something, that 89, the figure is your gateway to 90.
I was having a conversation with Michael Brown, and I know Ryan, you did as well earlier this week. I had a conversation with him yesterday. He makes a great point regarding, and he's from Pepperstone, for those of you that don't know who I'm referencing. And I had, let me just make sure you guys can see this, just because I want you guys to go back and watch this video if you get an opportunity. On Trader Summit, I was talking to him yesterday, and I'm not sure, because Ryan, I haven't watched your trade-off show yet that you've done. He made a really great point about the Swiss National Bank, is they don't meet as often as every other central bank. So if they're going to move, there is a risk that they're going to move. And Kman, you just said it was what, 25-30%, which is that was the market pricing that I saw yesterday.
I mean, I've been saying it for quite a while, so perhaps Mr. Brown has listened to me first before talking to you. So
maybe he is, and maybe he's listening to the Flow Show, and he goes underneath the radar and listens under the name Mrs. Michael Brown.
Yeah,
I'm just kidding. but
or James Brown.
Or James Brown. Hey, James Brown, if you're listening, and let us know. But the thing is, which is a great point, and everybody I think needs to take this away. Because you hear these shows, whether it's you're listening to the F.A.C.E show, the Flow show, whatever show that you're listening to, and you're hearing us say things. There are certain things you need to pull away from these shows versus it just going in one ear and out the other. And I know that's very common. That's a very common practice with a lot of traders. That's why during the Morning Edge show, I have to stop when I'm trying to explain a concept and say, did you guys and gals hear exactly what I said? Did you actually pull out a pen and paper and take a note there? Because it is important that you understand that the Swiss National Bank doesn't meet 8 times a year. It's important that you understand that, because if they're going to move and they want to move, it might have to be this week. So anyway, Kman, why don't you go and
that's
finish
exactly
explaining.
my thinking. Yeah, that's exactly what I said. That's putting me in my expectations higher than those 25-30%, because if they want to send a message, and they have been pushed into sending this kind of message by corporate Switzerland, that is really pushing me to think there's a higher probability than just 25-30% that they do something.
Sorry, I just heard something else. But anyway, it sounded like a squawk. I agree with you, and I'm if you notice the Euro Swiss, just by the way, this is the Euro, not the dollar Swiss. This is the Euro Swiss. Euro Swiss has even taken out new trend highs. Divergent relative strength, yes, 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 but still doing the unthinkable to anybody who's short the Euro Swiss. I still believe that parity is back on the table this year, and could be earlier rather than later, as far as I'm concerned. And I'm going to continue to run this one. So yeah.
Euro Swiss is 96 3/4, 90 3/4 figure. That's where we started the year-end sell-off from.
Yeah.
That's where it started, and that's your 96 3/4, 97 the figure.
Yep, that's it right there.
So if that goes, then we go a lot higher, I think.
100% agree. And I know Swiss, anybody who's long Swiss right now, or excuse me, short Swiss right now is starting to sweat. They're starting to get that little sweat bead building up in their forehead. Let's talk a little bit more about the Aussie. I've obviously been leaning into the Aussie short. Most of you know that. Yesterday, I want to just show you technically what happened, because I think this is pretty important. Because we were sitting here at flag support very well. We'd talked a lot about being at this big, 65.50, 65.40, big support zone, and broken triangle support, flag support. RBA came in dovish, and I think the best trade setups right now are being short Aussie dollars, and there's a couple different ways to do it. Aussie Kiwi below the 200 DMA. Which we talked about yesterday, a lot on the morning edge and daily roundup. The Aussie dollar, is not following copper. There's a risk now that we start trading down towards Dale. Dale brought this up yesterday, and I think that this is a perfect target for the Aussie near term, is this lower trend line that you see here around 63 cents. But the RBA is having a difficult time, as China is also struggling as an economy. And I have to say it again, the RBA came into, we came into 2024 with a pretty hawkish RBA, and it's now starting to get priced the other direction. And that is, I think, a big risk. And then on top of it, you see stocks, I'm going to talk about the S&P for a second. We are at ascending wedge support today. And with the NVIDIA chip conference that came out, we didn't get anything new, and now you're starting to see NVIDIA is trading a little bit lower pre-market. Now, also keep in mind that this is happening, right? Here, let me grab the you got a triangle consolidation. Now we're starting to break down pre-market. So watching the market today, respond following this big chip conference. We got the keynote speech last night from NVIDIA. Nothing new. Everything's like, oh yeah, I already knew that. We talked about that during the week ahead video. We start seeing this reverse, and we start seeing the semiconductor index reverse. The leadership of the market. You're going to start to see, risk aversion, which is going to weigh in on the Aussie and some of these commodity currencies. You're starting to see the dollar Mexican peso. I played this long yesterday, right off of these lows, sold it right when we hit 1685, and it's giving us another move higher, and we start squeezing above 17, and it's this is where you can start to see the Mexican peso really take off towards the 50 DMA and the 200 DMA once again. Now, we do have Canadian CPI today. I want to make sure everybody sees the fact that the dollar Canadian pullbacks have been very minor. 38% retracement, you can see right here, basically has contained any dip. We're nearing that 136 level, and crude oil is breaking out. Let me say that again. And crude oil is breaking out. We're above 80. We're above 81. Now today we're above 82, closing in on 83. And the dollar and the Canadian currency can't get a leg up. It's a very similar situation to the Aussie. So I think the risks are building that we break above 136 and we start trading towards these extensions, 136.50 to 137. Now it's not just the dollar CAD. You can see it in the Canadian yen. You can see it in the Euro Canadian, which I happen to be fairly aggressively long at this point and looking for a breakout. Even sterling Canadian, you know, is pushing up against some major resistance here ahead of the Bank of England. But how are you guys seeing the Canadian currency? Ryan, what are your thoughts here going into the Canadian CPI?
Yeah, I haven't really looked at it, to be honest, but CPI is expected to largely come in unchanged, and the headline going up a bit. All the other trim medians and all that stuff looking like they want to be unchanged. Dollar CAD for me is on a bit of a trend line around 135.70. It's a real old one. It goes back. I'll just get my chart up. It goes back to way back. Yeah, it goes back to October 2022. There's an old trend line that I've been using off the highs, and that comes round about that 135.70 at today's money. So that's going to be my level to look. But it's the same for every central bank. If inflation goes up, then the market gets all hawkish. If inflation comes down, then it gets all cutty and dovish. So yeah, two-way risks from this. We know we've got those highs up around 136s, 136.05, call it. So that's a level to watch up here. Down below, it's into 135.5, 135, and a bit of a zone I've got from there down to 134.65, 70-ish. So yeah, plenty of range there to play with. I know that.
Yeah, and it looks like it wants to pop, and I have to. I'll just say it again. You know, above this 136 level, and you know, we start really squeezing. How about you, Kman? We got just a couple of minutes. What are you thinking?
Yeah, same thing. It's been a very bad reactor to whatever oil gas is doing. Same as the Norwegian kroner. Norwegian kroner is even worse.
Yep.
And we are trading. There's a bit of a wedge ongoing there as well, I think, in the dollar CAD, and we are trading on the underside of it again. So yeah, and that 136 is one that I guess there's a lot of eyeballs on there. If that would start to go, so any lower print is a risk for the Canadian dollar, just because of those reasons that you also mentioned about the Aussie and that I just said about the Norwegian kroner. It's we can't really trade on the back of oil or commodities to trade those currencies right here and now. Yeah, if you look at that, it's there's a bit of a break going on there, and no reason why. I mean, Brent is trading at 87. Gas is trading coming off a little bit now, but it's also trading higher than it was, and can't get a footing, this Norwegian kroner.
Yeah, these look like they really, really want to break out to the upside, and all we need now. Think about this. I know we got CPI coming up here in just a second, but you throw in a hawkish FOMC that just doesn't want to be political into an election year, and I mean you're the Fed, right? It's like, do you really, you know, cut rates, loosen financial conditions more, stoke inflation ahead of you know, in a political environment, and then try cutting rates, and then you look political. You don't want to look political. You still have inflation that's sticky. So you have a semi-hawkish Fed this week, and weak Canadian inflation. Next thing you know, the dollar CAD's trading up at 138. So we're going to see what that reaction is here in just one moment. With the Canadian CPI, let's go ahead and just get ready for it. Do we have any other U.S. data coming out?
Housing starts.
Housing starts, yeah. And, you know, housing starts, I'm sure, and you can see that we are expecting a little bit bigger number. I'd expect that to continue to climb, you know, and housing is a very big issue in the U.S. Affordability is one, and definitely inventories is another issue. Compounded, you just have sticky high, you know, housing costs. People don't want to move. You guys know the whole story there. People don't want to move. Rates are too high, but we have very low inventory because no one wants to move. No one, you know, wants to get rid of their rarely low, you know, sub 3% mortgages or wherever they're at. So anyway, Canadian CPI coming out. Let's see the data. It is coming out in exactly 10 seconds or 13 seconds, now 10. And let's see what the reaction is here.
Lower.
Oop, there goes the dollar CAD. All right. Well, lower inflation. Like I said, couple that with a stronger FOMC or a more hawkish FOMC. We're going to have a dollar CAD that's trading up at 138 by the end of the week. And that would be scary if you are long Canadian dollars. All right. Well, Dale.
And a bit higher housing numbers in the States.
Yeah, yeah, look at that. Housing starts. Makes sense. I mean, if I was a home builder, I'd be building the shit out of houses right now. I mean, that's what I would be doing. I do the what is that? What do they call that? Shrinkflation? Yeah, here's a small house. It's affordable. It is like half the size of other homes, and it's on a little lot of land. But I'm going to build them and sell them like hotcakes. I'd be doing shrinkflation, and if I was a home builder, that's what I'd be doing right now, and I'm sure they are doing that right now. Dale, I hope you have a great interview with Rohit. I was just chatting with him, and I hear he's coming to the United States, so I'd like to hear where he's visiting, if that is truly the case. Dale, I hope you have a great interview. Ryan Kman, I want to say thank you guys for the coverage. These guys were up at 0 dark 30 in the ForexAnalytix chat room. You want to see how busy it was last night in the ForexAnalytix chat room with Kman, Ryan, obviously myself, everybody, all the rest of the crew. All you have to do is go look at what we were chatting about last night, and there was lots of yen conversations last night, talking about everything that's moving, all the headlines that are coming up, and everything that's moving the markets. You guys just need to come in and check it out. Be in the ForexAnalytix community, because that's where it's at. It's the most active trading community that you'll find on the planet. And we don't talk politics. We don't talk religion. We sometimes talk good Netflix shows when nothing else is happening in the summertime. So see you all there. And thank you, Ryan. Thank you, Kman, for being a part of this.
Thank you.
Cheers, mate. Thank you.
Can you promote Rohit, please?
Yeah, I will find him. Yes, sir.
Oh, he's right there. Doesn't let me.
Ooh, let's see if I can find him.
R.
Yeah, I got him. Let's see. I mean, he is okay there. He should be coming over now.
Yeah, he is now. See you, Dream Team.
Thank you, Coach.
Cheers, Dan.
All right. See you. See you, Ryan. Kman. Good hunting. Rohit Srivastava at India Charts. Welcome back, buddy.
Thanks, Dale. Great to be back. Nice
So,
to meet you all.
let me test my memory. I don't know, 3 months ago or so, you were becoming more cautious going into 2024. Did the length of time that risk kept moving on surprise you, or was it part of the plan?
It did surprise me to some extent, but at least as far as India is concerned, it has played out eventually. It's probably still not started to play out in global equities, but in Indian equities, we did get a huge sell-off in the broad market in the last month, and so that's set the stage for more to come.
Okay. You could share your screen, and a picture speaks 1,000 words.
Yeah. So this is a chart of the Nifty index. It's of course a line chart here, and make it a bar chart for those who are more comfortable. What we have here is basically an ending diagonal. This ending diagonal has been developing over the last couple of months. I actually thought as we were entering 2024 that the ED was already in formation, back here.
Yeah.
And now we've got a even broader one here. And right. I do think that what you're looking at is a 5-wave decline, which means something like 1, 2, 3, 4, and 5. There could be a near-term bounce, maybe back to the fourth wave, back to 61% retracement, and then a much bigger fall coming in. Now, why do I say that we are done here? Is India has actually seen wild moves in the broad market. And by broad market, I mean the mid cap and small cap indices. And that is where a lot of the damage has actually happened. So I'll just show you that as well.
Would you equate it to the Russell?
No, very different, because the Russell is still not above 61% retracement of what it gave up in 2022. So there's a huge negative divergence when we look at the Russell and the S&P or Dow. But in India, it was not the case. In India, the small caps and mid caps are the best performing areas. All the money's gone there. So this is the index of the Nifty small cap. It made its all-time high here on the 7th of February, along with the mid-cap index. And from there, you can see it's been a pretty sharp fall. So the decline has essentially come into the place where all the money was going. That is where it's really making a difference. So the Nifty index, the main index which everybody watches, doesn't look like it's fallen that hard yet. But I think it eventually gets there. This is just the beginning snowballing effect starting, in the hotter space. Now, why do I also think so? Another reason is there was a lot of leverage here. When I look at the futures open interest in our market, then it actually reached 18 times the value of the index, and that's a pretty high value to have. So what I do is actually take the total open interest in our market in India and divide it by the index just to normalize the data. And I found that the level that we reached this time around was very, very similar to what it reached in 2018, when many markets peaked out, including the same mid-cap indices actually topped out in 2018 on a very similar ratio reading. So you can see that at the bottom end of the chart. And this red line essentially represents when the positioning, basically leverage, was as high as similar to what it is today. This is also the same ratio reached in 2008, right? Everybody remembers the 2008 peak because of the GFC, and that's back here. The same red line was reached, which means there was a lot of position. So I normalized it by dividing in the total open interest with the index, and found that it peaks, the market, essentially the broad market peaks every time we reach this ratio. And we reached that level, and we've seen the sharp sell-off in the broad market. So I think the unwinding process is just, getting started.
Okay, so you're not late. Everyone
Not
thinks
late at all. Not late at all.
Yeah, people think if they don't sell the top, they're late. And it's kind of like, what I've said in the miners, which have, really had a nice move to the upside, and it could be embryonic. Did interest rates play a role?
So interest rates in India have been flat, no change for more than a year now. So they have not really played a role. Bond yields also have been flat. I thought they would go up with the US, but they haven't so far. In fact, I think the risk to bond yields even around the world is more to the upside than the downside. Let's see. Slightly contrarian view.
How about the currency? Has that played a role?
The currency also has not played a role. So the central bank in India has been managing the currency in a very, very unusually tight range. I'll just show you the chart of the Indian currency. It spent almost 18 months in the same range. You can see that's just gone flat. Okay, it's doing absolutely nothing over here. So
they love that though, don't they? Just having no volatility in the currency.
Absolutely, they love it. So I think they have instigated it. The central bank is intervening almost all the time, killing volatility in the currency market. But that sort of makes it like a spring, right? Whenever it unwinds, it'll unwind sharply on the upside. If I look at the monthly bands, for example, they've really tightened. The monthly Bollinger bands have just tightened. That sort of sets us up for the next expansion. And I think that will be on the upside. It's very similar to what we used to get back here. But back here, Indian currency was a controlled environment. And we slowly opened it up. We, in fact, started futures trading in India, only started over here. Okay, this was during the 2008 crisis. We opened up the futures market for trading currencies to domestic Indian investors, basically. And since then, it's been very, very different. So prior to that, we used to get tight ranges. Now in a free environment, to get such a tight and controlled range is something that's bothering traders like me.
I heard from Bollinger that when you have the compression of the ranges of the bands, that the first move out is the fake out. The first breakout's a fake out. And the prior example you showed, that's exactly what happened. That last, first we went to the downside. Of course, the bands expanded after that back in what was 2002 you were showing? I'm not sure which time.
This here.
Anyway, something to pay attention to if you're playing breakouts of bully bands, that normally the first move out is the head fake. So, the ultimate contrarian in me loves that. What he's saying, gold has really put on a nice move. I'm not sure what it's done in dinar terms, but this gold rally for real?
So I sense that the dollar is likely to move up quite a bit.
Okay.
And that would have a negative bearing on gold. So if I actually take a long-term view and short-term, I'm drawing an ending diagonal, as you can see here. So I'm really thinking that this is A, B, C, D, E, which means we actually should have completed something at this peak. And that should be a fifth wave, right? Because ending diagonal is a fifth wave structure. So if I really go long-term, what I'm thinking is this is wave 1, this is 2, this whole congestion here is 4, and we just completed an ED in the 5th. Now, of course, that means long-term you still go up, but there could be a setback before the next big leg up.
Interesting. Is there an alternate count?
The alternate count would be to think this is just 1 of 5, but it doesn't fit because there's a lot of, these are not looking like impulse waves unless I really subdivide it like 1, 2. If I take multiple subdivisions and continue higher, that means I need a lot of third waves to happen on the upside to really continue.
Okay.
But I would be forced to do that if it breaks out and sustains above this wedge. So far, this rally is A, B, C, so it's 3 waves. If it becomes a 5 wave, then yes, I would have to think about it.
All right. Anything else in the metals? Is the silver picture worse or more positive?
So silver is also forming a triangular structure. It hasn't touched the upper line, which is close to around 26.28. So there is still some room for it to move higher. But once it completes this triangle, I think it simply would join gold on the way down from the ending diagonal. That is how I'm thinking of it. I think in the commodity space, the place where I'm bullish, which stands out of all of this, is actually oil. Yeah. Oil is the standout. Copper is also making moves. So I think copper is getting started. It'll be surprising that oil and copper run up and gold and silver don't, but that's what the charts are suggesting right now for whatever reason. So oil is getting off these lows. I'm sensing it goes back to $100. I'm looking at the parallel channel to the entire previous move, which means something like this. So I'm looking at it getting up here to the top end of this range, which should be close to $100.
Okay. Does that mean there's when you talk WTI and copper, does that mean that China is bottoming while the rest of the world is topping?
It may look like that near term, but I'm a little worried about China because I should not say worried. I just want more confirmation because every time there's been talk of stimulus around China, which happened a year or 2 back, and I thought it had bottomed. In fact, the Hang Seng also looked like it was an impulse on the way up. But eventually we broke the lows across Chinese indices. Hang Seng has still not done that, but the other ones did. So I don't know whether I should just jump onto the stimulus rally. I'll probably give it time before doing that. But what you can get sometimes is known as the late stage commodity rally. If we just go back to 2008, when the equity bear market pulled off, oil actually went to $135 even during the bear market. So there's this. I think Martin Pring has this chart where I have it somewhere. I haven't put it together here, but it looks something like this: that you have an equities, you have bonds basically, which bottom first and top first, and then you have equities, which is the second cycle, and then you have commodities, right? So there's a lead lag. So the first one to peak is really the bond market, which then starts falling, which means bond yields start rising. Eventually, it pulls down equities, and then last is commodities. So we are somewhere in this stage where the commodities are picking up.
Okay.
Doesn't
Because
mean
the
it's a
ratio,
bull. Yeah.
because the ratio, the commodity to equity ratios at historic lows.
Yeah.
Yeah. Do you have a chart on that on the
No,
comparison?
I haven't done that one.
Okay. So S&Ps, are they going to join the downside with the Nifty?
So I am patiently waiting for that signal because, like I said, I do think the dollar is heading higher.
How much? What level are you looking for in the dollar?
So
I
I am
remember
actually,
you were
yeah,
bullish a dollar at going into the new year.
Yes. So
I
I'm
recall
thinking.
that.
So my preferred view is here, doing some kind of a second wave and starting a third. Maybe the second wave is here. So we're in early stages of starting a third wave at a
Wow.
much larger degree. And so I
Okay.
think this is the first pull up. This retracement is exactly 61%. So current move would go to around 107, 108, something like that.
Okay. Do you have an alternate if, say, it only gets up to, say, 106? We put in a lower high, don't take out that 107
So I
level?
do have a couple of alternates. So here's first the bullish picture, which is ABC, in which case we are doing C 1, 2, 3, 4, 5. The alternate is to really believe that no, the dollar's peaked long term, and whatever is going up is just a B wave. It won't make a new high. This was my original thesis, say 6-8 months ago. I slightly changed it because the monthly charts have really held out. The 40-month average is held somewhere down here. The Bollinger Bands have tightened there. So I started to consider the bullish case till I get fresh evidence that we are really breaking below those levels, close to say 100. I mean, seriously going back below 100.
Right.
So it could even be a B wave. It's possible that I don't get a third. I just get a bump up and then it goes down again. So that is a possibility, but I'll consider it once we are up there.
That's still over 110.
Yeah. It still can get you to 110.
So so either a bull market or a bear market rally for a B is still big money on the upside.
Yeah.
Okay, those are the best trades because either way, you have the direction. You're not sure about magnitude.
Correct. That's right.
Okay.
Now simultaneously, I have the sense that while everybody's still thinking about lower bond yields, I'm actually thinking if the fifth, you're thinking it's over, is not yet over, which means that there is one last run up in bond yields before we actually get a reversal. So I've put it something like this, that, this is the fourth wave down here.
Yeah.
And starting the fifth up, and we just done 1 and 2 early stages. This can probably get us back to the 5% or a little over 5% before we are done. This is where the whole dollar pressure and equity pressure really builds up from, and this may be lagging behind what we are seeing as rising commodity prices. So, and that's what I think. Then at some point of time gets the equity rally also reversing. Now, in my big picture, I'm still marking this entire rally in equities as a complex wave, which means that I'm thinking longer term, it's still a B wave. Okay, so that means that the 2022 peak was the final peak of the previous cycle, and from there we are just going. We've done A and we are doing B. Right, so this is an A, and this whole thing is a B. We still have a large C down to unfold at some point of time. We just don't have clear signals that it has started yet.
Okay.
But
So
we should be in late stages of this ending because this will be C of Z. So we're close to ending.
Is that an expanding flat, as some eliticians call it?
That's right. Longer term, it will be an expanded flat.
Okay, and that really throws people off and gets people as bullish as they are.
In fact, I think
now.
So if I actually look at the Dow, this pattern would be far more clearer on the chart of the Dow.
Because it doesn't have NVIDIA in it. Right? That kind of distorts other things, right? The AI trade.
Yes.
Okay, so
that's the Dow. Entire move in NASDAQ is very clearly A, B, and C.
That's
so
NASDAQ
I put
there?
Yeah. Sorry,
Okay. That's NASDAQ or the Dow?
this is the Dow.
Okay.
The Dow is a very clear ABC. It's not, doesn't look like the NASDAQ might even look like a 5 to some people, but the Dow clearly does not. And which is why the expanded flat scenario is very, very obvious, or rather
Dangerous.
clear, dangerous and clear on the Dow. It's reached 123%. We typically allow up to 138% in wave B of an expanded flat. I have, of course, marked it X, but basically it should be B. I think I should change that. So it's within
Changing
the
account live on Face. Roll it. All right. What else should we be aware of? Your work's so great. I hear you're coming to the US.
Yeah, visiting San Jose. My brother's there, so I'll be staying with him and probably traveling around some of the West Coast.
When? In the summer?
No, just this Saturday. So I'll be leaving this
Oh,
Saturday,
wow.
and I'll be there for the next 3 weeks.
Yeah, well, good. It's better you come now than in November or late October.
Oh yeah, that's
You know
too
what I mean?
too cold for us.
Well, things might be a little chaotic. You have any, I know you're an Elliotician. Do you have any view on all the different elections that we have going on across the world? Wasn't Gann saying that 2024 was going to be a rough year?
Yeah,
Or is it
2024
next year?
has got the leap year. Yeah, there's a lot of reasons why people think 24 should be a rough year. It's the
How
8-year
about,
cycle, 16-year cycle, God knows
okay,
what not.
yeah,
So, but the elections, as you mentioned, it's tricky because everyone thought that elections means the government spends money and the market stays up all the way till the elections. In fact, India also has an election coming up in May, even
right.
earlier than the US. The thing is that prior to previous election rallies, we did see a correction. If I go back to 2014, India's election, 2019, we pulled back in Feb and March and then rallied into the election. This time around, we're just not pulling back. This market just held on all through Jan, Feb, March, and now we've got some kind of a sell-off. I'm actually wondering if the cycle this time is going to be slightly different than what we saw the previous times, because it's not following the seasonal pattern at all, which makes me feel that something's going to be different this time than what it's done before with the election cycle.
Do you pay attention to eclipses?
Not so closely, but I was listening to a presentation of something kicking in from the 21st of March.
Okay, that's the equinox. And
Equinox,
the low that we had in October
yeah,
was on the eclipse.
Okay.
To the day.
Wow.
So it sold off on, we had like a lunar eclipse, which had sold off into the solar eclipse and bottomed in October. So I'm thinking, which direction the market's going to go into it could be a good fade. If we're selling off into it, there might be something on the long side. If we're still rallying, it's only 3 weeks away. So we'll see. But something I started paying attention to, and I've seen turning points on it.
Yeah.
Not just because it's, I can get clicks because
Yeah,
it sounds esoteric.
if your wave structure fits with one of these dates, then you can get a good risk management point. The only thing that I tell all in India, there are a lot of people who tweet astrology. So the only thing I tell people to be aware of is that don't make a call out that this is the date and so everything's going to turn from that date. Something will turn for sure, but we don't know the magnitude. And for that, you need to study the wave structure, the momentum, and really figure out the importance of that date. It may or may not be as significant every time. So the significance has to be seen from other factors.
And it's a different type of astrology than in the West. It's what, Vedic astrology?
Yeah.
Vedic, based a lot upon numbers. I have a friend that shows me that really the origins of everything started in India.
Yeah, that's another theory. Yeah.
Yeah. Okay. Great presentation. What's your best idea, say, going into the summer?
So at least I have clarity, I think, on the Indian market having rolled over. So I think the Indian market is clearly a sell on rise. I will wait for the US to give me that signal. But in the meantime, I think it's higher bond yields, a higher dollar. Possibly if there's any short-term pullback post the FOMC meeting on the dollar or on yields, those would be good entry points to watch for. So that's in the next couple of days, because I'm sure they're going to maintain the same thought that, well, we're going to cut rates sometime in the second half of the year. They're not going to do anything now, is already known. And it's possible that these markets pull back on that announcement, which would probably be a good entry point for the dollar and the sell on bonds, basically.
Oh, so that's interesting. You think he's going to, even after the recent inflation data, you think he's still going to sound a bit dovish?
I think so. I think he will want to communicate that more from a policy standpoint, because what central banks do is they don't always set policy by changing or moving. That is a rate decision. Sometimes they try to set policy through language. And
well, he certainly released the animal spirits when he
yeah.
was Dr. Jekyll in December.
Yeah. So he will use his language.
That was a victory lap. What? Huh?
Yeah, he will use his language to hope that, you know, the inflation animal doesn't come back.
Okay. Well, I mean, with your counts on the dollar, gold, and yields, interesting that there's going to be cuts, but it's not going to matter because yields are still going higher.
Yeah, because he's only going to talk about cuts. He's not going to be able to do it.
Okay, so he'll talk about it, but there'll be no cuts this year.
Yeah,
that's where you're at.
Yes.
Okay, you ultimate contrarian. All right. Well, Rohit, how do people follow your great work? And I know you're a hard worker, and you put hours upon hours of effort into your work, and you have you teach people, you have a lot to offer.
Yeah, we do that. So for Indian investors, we've actually created a data platform known as Strike, which I was showing here. All the market data in India, whether it's the positioning, like you get CFTC data in the US, similarly, Indian positioning of Indian investors, the derivatives data, fundamental data, all of that. It's like a complete analytics platform for anybody doing any research. So this is what we are really asking people to start using. We've priced it so that retail investors, individual investors can afford it. But where I publish my work is, of course, on indiacharts.com. So people who can download the app and continue to follow daily updates that I write at indiacharts.com or on the India Charts app, which is both on the iOS and Android platforms.
Give me the translation under Strike.
Translation?
Yeah, mirror past data high. What's it mean? On upper left-hand side of your website, what you were just showing. Oh, now it's not there. It's okay.
Yeah, this.
Yeah, right under the upper left-hand corner. There.
That that is we've written it in the Indian language. It's in Hindi. It says "Mere paas data hai," which simply says that I have all the data.
All right. All right. That's great. All right. So that's kind of like your tagline.
That's the tagline.
And you have more than just data. You have great interpretations too. I'm a fan.
Thank you. Thank you so much.
And always appreciate, we've been talking for years, and always appreciate you coming here and your giving spirit to lay out right or wrong what you're thinking. You're always clear. You're not, on one hand, and then it could do that, but it might do that. And if it doesn't do that, it could do this. So appreciate your clarity.
Thank you. Thank you so much.
All right. I'll be talking to you in late spring, early summer. And thank you I'm glad our paths crossed.
Yep. So I should be back by then. Thank you. Yeah.
Follow Rohit at India Charts on X. Go to his website. He's a top-notch guy, and I've talked to many. So that's a wrap for us here. Join the team in 15 minutes on the Morning Edge. Don't just count your pips, count your blessings. Tomorrow's a big day. There could be nice trading opportunities, just like Rohit said. If they sell off the dollar, those could be good rips to sell. You know, the dream team's on that page. So I'll see everyone tomorrow for Fed Day. Thanks again, Rohit. People are thanking you. And remember, don't forget, you could always find something to be grateful for. So
Yeah.
don't just count your pips, count your blessings. How do you say goodbye in Hindu?
When
You
we
don't
say
know?
thank you, we say dhanyavad.
Okay. All right. Thank you. All right, guys. Have a good day. Thanks for paying attention. Adios. Thanks, Rohit.
Thank you.